All right, market was on a roller coaster ride this week. We started with earnings. We called in our guys to talk about it all. Martin Baccardax still here from London, our London bureau chief.
Day 5.
Day 5, and I dragged out Kevin Curran, a Real Money stocks reporter. Thank you, Kev. You were all dressed nice. I had to pull you in.
Thank you, Ryan.
Martin, let's talk macro. What the heck happened? That's what everyone wants to know.
Interest rates are the story really of the week. Essentially what we've seen with both the rebound today and the sell-off over the past 2 days is that the way we price stocks is based on whether we think interest rates are going to rise or fall, particularly tech stocks, because their revenues are probably not going to grow for several years. The longer out the revenues, the more concern you have about inflation. If interest rates are rising, the value of those tech stocks are going to fall, and that's a big reason why we saw such a roller coaster over the past 2 days. Some of that is coming back right now because there's some bits and pieces of economic data that suggest we may not see the inflationary pressures that people were worried about only a few days ago. And that does tell me that the markets are very skittish.
Super skittish, and yet they were sort of jubilant this morning when we got earnings from JP and Citi saying things are not so bad.
Well, yeah, well, it might be a sugar high because it was very short-lived.
It's true.
No, but I think that the macro pressures that Martin mentions are also true for the banking stocks. I think some of the things that were said in the earnings call, for example, in JPMorgan, they had a fantastic quarter. They beat on revenue, they beat on earnings per share. But then Jamie Dimon says that there's macro issues bubbling up all over the world. And I think that makes people a little bit nervous. I mean, if you look at the interest rates that he mentioned in a booming economy, it should be a great quarter for all banking stocks, and it was for JPMorgan. But what they said about the macro pressures that have been causing so much fear this week took it back down this afternoon.
Let me ask you this though. Do you think it's a total, like, it's a CYA, dare I say, like, because I could kind of take the kitchen sink if indeed things go bad. So why not? Well, why not just put it out there, just in case I don't have good numbers?
I think it's a good point. If the smartest investors in the world aren't able to make a definitive assessment of the bank earnings that we saw today, that tells me the rest of us need to be very cautious about the decisions we're going to take into next week. There was something for everyone in those earnings. There was better net interest rate margins. That tends to be profitable for the banks. As you said, there's lots of economic activity, lots of loan growth. That should be profitable as well. But people are looking at the bond trading aspects of some of these banks, which wasn't so great. In Wells Fargo's case, they were looking at some of the scandals from the past, which laid upon the earnings. So a little bit of something for everybody, and the bearish and bull case at the same time, and that generally means markets are going to go in and out of positive territory.
No, yeah, absolutely. And I think that one thing that we should touch on, because we touch on individual stocks, is that not all banking stocks are created equal.
Excellent.
Fair point.
So I think if you look at Wells Fargo, for example, they did have the scandals, and that's adding to a little bit of the pressure. So they were up this morning because they didn't have a scandal this quarter.
It's a good day.
Yeah, so it's not a bad day for them, but unfortunately they lost $40 billion in deposits, largely given to JPMorgan, who had record numbers for that. So I think if you're looking at playing the banking stocks, and as we said, the smartest investors in the world don't know how to play them, so be very careful.
Who do you like?
Well, I think that TheStreet, I'm merely a conduit for information and opinions, but I think that TheStreet likes JPMorgan.
Yeah, I agree.
They seem to be the most reliable bank.
Bigger's better at this stage.
Yeah, absolutely, absolutely. And they've also been the most consistent on earnings of any bank. They haven't missed in earnings since 2015. So if you want to bet on a winning horse, that seems to be it.
And I feel like the whole world is super comfortable with Jamie Dimon at this point. Like,
very good point.
You know,
Teflon.
Right, Jamie Dimon for president. That's just me. All right, let's talk about going into the weekend now. A lot can happen. Jamie's not running for president. Let's just be clear. But you brought up Brexit. It's almost like we forgot that that's actually happening.
It's definitely out there. There's a chance we could have a breakthrough over the weekend. There's lots of signals that the UK government is going to sign some kind of a concession agreement with the European Union in the next few days, because they have a looming deadline to get everything in place prior to the March deadline. But nonetheless, that is a magnificent risk for the European markets, because we don't know what's going to come out on the other side. And I think that's part of the reason why European stocks have lagged in both the upward and downward direction, what we've seen on Wall Street, because that overhang both in Italy and in the United Kingdom and indeed in Brussels has prevented investors from taking a real chance.
And now next week promises to be just as busy, more earnings, tech kicks it off. What are you expecting?
Yeah, so tech was a bloodbath this week. It really rolled it through the week and lost a ton of money. Companies were losing billions of dollars off their market cap. But it seems like a couple are rebounding today. Netflix is up about 5% right now. Facebook's still under a little pressure from different hacking things that have come to light, but it'll be a big week for them to show that they can turn things around after an absolutely atrocious week this week.
It was an amazing week to have you here.
Oh, thank you.
It was great.
It was delightful.
Follow Martin from London. Kevin, Kevin's here. He's not going anywhere.
Unfortunately.
And we'll be following this wall to wall.